Welcome to the latest Motley Fool scoreboard. I'm on in Chocovaloon. We've got longtime fools Rick Menares and Toby Bordelon giving a 1 to 10 rating to a makeup disruptor and Moneyball wreck. It's e.l.f. Beauty, ticker symbol e.l.f. First, we'll rate the strength of e.l.f. Beauty's business, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Rick's at a 6. Toby, you're at a 7.
Yeah, so e.l.f.'s a cosmetics manufacturer making affordable cosmetic products, beauty products. The company's carving out a nice niche for themselves, focusing on, I'd say, perceived high quality, but low cost. And that goes pretty far in today's economic environment. The brand is very strong, a lot of momentum here, margins are good. The company has done well with new product launches, getting them to market very, very quickly. It's a social media driven marketing strategy they're using, and that's paid off so far. One concern I might have is the acquisition strategy, and best example of that is the recent Rhode acquisition, which is quite large relative to e.l.f. Will this work out, or will it end up transitioning into a company that overpays for the next hot brand? I hope not, but that remains to be seen.
Yeah, like Toby, I'm a fan of the business model with its aspirational brand of high-quality products, but cheap enough that you can buy it at a Walmart or a Dollar General. Growth is strong, but unlike its products, not entirely organic. It's had 2 big acquisitions over the last 3 years. There's also a competitive industry that we're talking about here, so I went a notch below Toby, 6.
Yeah, one of their strengths of their business is they're big into dupes. So you just kind of mimic what's popular, make it cheaper, and you've got this big brand, which kind of is your product development a bit too. The dupes are. For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Both of you have 7s, Toby.
Yeah, CEO Tarang Arman, he's done a great job keeping the company focused, maintaining a startup-like culture as they continue to grow, which is really nice. Not afraid to take risks, like the Rhode acquisition. I use that another example here. And you really can't argue with the track record since the IPO. They've done a solid job with this company.
Yeah, so the founders founded the company 21 years ago, and 11 years ago, they got bought out by TPG, private equity firm. And came in and was part of that. He became CEO. And he did a couple things like right now. You're seeing, a bunch of dudes talking about cosmetics. They saw that in their boardroom. So Amin was very effective in actually says we need to reflect our community. 2/3 of the board is now females and widely diversified. All that. He was a CEO of Shift Nutrition before he came on board. Worked at Clorox, Procter & Gamble. He has a 75% approval rating on Glassdoor. That's fairly good. You do see e.l.f. get dragged from time to time. It happened this summer when it hired the controversial comedian Matt Rife to be in one of its ads, and it even scoring a product placement last year in the new Mean Girls movie. It got dragged for that too. So running a cosmetics and skincare company, it's going to be to attract a lot of shade and cover-ups. It's a delicate balance, but there's no concealer when it comes to the stock price. And in this case, when the company did go public in 2016, 2 years after the CEO was brought on board, it's been a 5-bagger since then. So that's a win. That's a 7.
Let's move on to financials. 10's a fortress, a 1 is yikes. Rick's at a 5. Toby, once again, you're higher at a 7.
Yeah, I like what I see here. The balance sheet looks good. $170 million in cash, a bit more than $250 million in debt. So, it's a nice mix there, manageable. You want to keep an eye on goodwill, I think, for potential impairment over time. They have been acquisitive, and that's a pretty big number relative to the rest of the balance sheet right now. It's fine, okay, but that's right now. But this is something to watch. Inventory has been coming down a little bit in recent quarters. I think that's fine, though. It's not at levels that are concerning to me at all. That suggest this is too low. What it looks like to me is increasing efficiency and controlling and turning that inventory. Cash flow is positive. Stock-based comp is reasonable. You love that. Operating costs are growing faster than revenue, though. I like to see a little bit better control there and get those margins moving in the right direction.
Yeah, so e.l.f. stands for eyes, lips, face, but in this category, I'll be going with earnings, longevity, and financials. Earnings. After a couple years of healthy growth, year-over-year earnings have declined in 5 of the last 6 quarters. Longevity. Revenue growth has more than doubled for 5 consecutive fiscal years, but it has been in the single digits in back-to-back quarters now. It's time to see if it can get Haley Bieber to sell them another company. And F financials, the balance sheet is respectable with manageable debt and reasonable. So I'm not so concerned with that. But again, I went with 5.
Excellent. I can't wait for the longer name companies like Berkshire Hathaway, Rick. Let's talk valuation. How well will e.l.f. stock do over the next 5 years? And how safe is it? Keeping in mind a 10 is a sure thing, a 1 is a lottery ticket.
Yeah, so I went with 5 to 10% 5-year growth. e.l.f. isn't cheap. 30 times next year's fiscal year's earnings. Revenue growth is about to get a boost from the Road acquisition, but I think the market is smart enough to value that non-organic growth correctly. I went with a safety score of 6 because it will outlast its rivals if there's a shakeout. It was built for whatever happens next. Soft economy, it has value price cosmetics, and you can pick up smaller rivals at a discount. Geopolitical instability, red lipstick, wartime, all that history's lessons. If the going is good, the ideal outcome, e.l.f. will be able to cash in on its scalability.
Yeah, 5 to 10% for me in terms of growth over the next 5 years. I think it's going to be a slight market beater, and there is nothing wrong with that. On safety, I went with a 5, a little bit lower than Rick. My concern is if growth slows, the stock's going to get hit like it has in the past. The low-cost positioning is good for a potential recession, to be sure, as Rick said, but they're not going to be totally immune, I don't think, if we get one. And that Road acquisition, I think it amps up the risk just a little bit, so that's a little bit of a concern for me.
Thank you both Toby and to Rick. They've given e.l.f. Beauty an overall score of 6.0 out of 10, and it's all right. But Toby has no topper. Rick thinks that Ulta is the top it for this category. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Six Flags. Till then, Fool on. Yeah, now that you mention it, I don't think I've been to one outside a standalone Ulta. I should go.